Hey guys, my name is Dan and welcome back to my channel, Investing with Dan. Today, I'm going to share with you a piece of advice for people who want to get into the stock market but aren't sure of the best approach or where to start. Now, for a lot of people, investing in the stock market sounds like an extremely daunting task, reserved for the businessmen in big corporations. But today, I'm going to show you a simple and cost-effective way of investing in your future. To tell you the truth, this is how I started my investment journey with my first ever investment, and I have never looked back. Taking the first step when investing in stocks is always the most difficult, but the sooner you begin, the better off your investment future will be. One of the most common fears about investing is picking the wrong stock and losing a lot of money if the stock drops in value or fails to ever grow. Now, the key to having a good stock portfolio is being invested in a range of high quality stocks from a variety of different sectors. So how do you do that effectively without having to have tens of thousands of dollars and a hand-picked list of the best stocks? Well, the answer is quite simple, and this is through exchange-traded funds, or ETFs. ETFs are a type of investment fund that buy and sell on the stock exchange, like the ASX or New York Stock Exchange. Essentially, an ETF allows you to invest in a list of companies while still only having to buy one stock. To put it simply, instead of only buying, say, apples, an ETF allows you to invest in a little bit of the whole fruit basket. There are a range of different ETFs that all have different goals, such as tracking the ASX 200, ETFs that produce high dividend yields, or ETFs that follow different sectors, such as technology and health. Speaking from experience, ETFs make investing much more straightforward and reassuring. I was also very anxious about making my very first investment in the stock market, but by buying shares in an ETF, I felt reassured by having such a diversified portfolio with little to no extra work. One of the most popular exchange-traded funds in Australia is managed by Vanguard and goes by the ticker VAS, or the Vanguard Australian Shares Index. Now what this ETF does is essentially invests in the top 300 stocks on the Australian Stock Exchange and tracks their market returns. This allows you to invest in a highly diversified portfolio of some of the biggest companies that you're most likely already familiar with, such as the Commonwealth Bank, Coles, and Telstra. By investing in an ETF such as VAS, you can generally expect long-term capital growth, handy quarterly or biannual dividends, as well as an efficient way at capturing long-term market performance. Generally, an ETF will have a management fee, but for the most part, these are quite low. For example, with VAS, the management fee is 0.1% per annum, or $1 for every $1,000 you have invested. Now I reckon that's a pretty sweet deal for having most of the hard work done for you. Of course, investing in the stock market does have inherent risk, and the same goes with ETFs. In essence, if you do invest in an index tracking ETF, your profit or loss will follow with the market fluctuations. However, historical data over the last 100 years has shown that markets have continued to grow at roughly 8 or 9% annually. So investing in an ETF will typically receive the same kind of results. If you're interested in seeing a list of the ETFs listed on the Australian Stock Exchange, I'll leave a link down below to some of the standout ETFs, which include VAS, which we talked about earlier, VHY, which is a high dividend ETF, and IOO, which invests in the global top 100 stocks, such as Facebook, Apple, and Microsoft. Anyway guys, that's all for this video, but I'll be sure to dive deeper into ETFs and their specifics in future videos. It would really help my channel grow if you could hit that like button and perhaps subscribe or leave a comment down below about any ETFs you're interested in or ones you've already got shares in. Well, that's it for this video guys. I hope you enjoyed it and I'll see you next time.